Well, hello. This is David McElroy for the Human Potential Channel, a show where we bring successful business people to explain what they do for a living and how they got to where they are, but most importantly, the type of thinking that they use to solve problems and overcome obstacles so that you, the viewer, the listener, can take their life experience, apply it to your life situation to improve yourself. Hey, do us a favor, give us a thumbs up and go ahead and subscribe so we can keep you on top of new things as they come to the channel. We're always looking for guests. So if you yourself would like to be a guest and have a story to share or know someone that would be, please reach out to me and I would be glad to coordinate that. So I would like to give our guest a chance to introduce himself, tell us a little bit about where he's come from, how he got to where he is, and share his life experience that you can apply to your situation. So take it away.
Hey everyone. First of all, Dave, thanks for having me. This is, a great space. I really enjoyed previous episodes. And part of what I always look for is ways to improve my way of thinking and how to add to my toolbox of, processes and strategies that I have. So I think this is a great initiative that you're taking. I'll give you guys a little bit of background on myself. I am Colombian. I was born and raised in Colombia, lived a few years in the States. And so I have that sort of cultural mix between the States and Latin America. Currently, I'm heading and managing the VC portfolio for a family office. I'm focusing both on the US and LATAM, specifically on technology companies. I personally love fintech. It's one of the areas that I enjoy most. The family has, great background and knowledge in everything that's construction related, health related. So we focus on those areas as well. And part of what that has allowed me to do is really understand, what companies and startups specifically need to be successful, and what, from the lens of an investor, what we look for, what we like in those companies that we want to not only invest once, but, double down and maybe triple down the lines. And so that has, given the circumstances of the VC world lately, where there's not been a lot of action, where we've sort of stepped back, taken a step back and decided not to invest as actively as we would have before. That's opened up a new field for me, which is what I've been doing lately as well, which is consulting for these startups, technology-related startups, both in LATAM and the US, and helping them out primarily understand in their finance function, how to, one, get access to resources, number two, be very efficient and effective using those resources, and number three, I think, is kind of having that strategy to be not only successful, but sustainable in a way where you don't have to go out and raise capital constantly. So that's what I've been doing lately. Yep.
Looked at lots of companies. Do you see a pattern of what's generally missing? What's most often left out that would be required for them to be successful that they somehow have just overlooked?
So there's definitely something that I always look for, and it's very important. It differentiates the very successful startups from startups that are either lucky and get through certain stages and through luck, or startups that definitely just die down the line. And I think the key aspect there is just being able to think one step, one round, one product, just being ahead of yourself, right? If you know where you're headed, it's so much easier to trace back or kind of back into the steps that you need to get there. And so obviously, especially in startups, your plans they're rubbish, right? You plan for something and then everything else happens and you kind of evolve, you iterate, you pivot. But the fact that you had an idea of where you were going and what you needed to do to get there, at least sort of takes you in the right direction, and allows you to be very, very, to have a good mindset in terms of how you're going to use these resources that you're getting.
So when you say resources, are you talking about the capital they'll get, what they'll spend that capital on, and what kind of return or improvements they'll get, what their expectations are, I guess, for those improvements?
Yeah, so capital is one of the biggest things, right? So obviously you need cash to survive, you need to pay your bills, you need to operate. I also love to think about human resources, right? How are you managing that talent? How much talent do you need? Where do you have your pitfalls in talent from your founders, right? Where you need to sort of add a little bit of talent to make your company great or stand out, or be able to execute on those plans that you have. So I think it's a couple of those two are the main resources that I have, and then that is supported by founders' ability to storytell. And I think this is one of the things that's not talked about enough in venture capital, and is you can have the greatest product, you can be in the greatest market, but if the founders don't have a way to communicate their story and engage people, they're never going to get capital, because you're never going to convince people that you're investment worthy. They're never going to get talent, because people are not going to be excited to join you. Usually in startups, you're not getting a lot of cash up front. You're getting some sort of promise of future performance and stock options or something like that. And then you're never going to get clients, because you're not able to sell that product that sometimes isn't even a reality yet, right? You need to sell a future version of something.
What would make a good story? If you see stories that are compelling and that aren't, or is it just the storyteller, that a good storyteller can take something that would otherwise be unimpressive and make it interesting because of their pure charisma?
I think it's both. I think that's where it gets dangerous. And I love you pointing that out, because sometimes we fall in love with a story that isn't necessarily great at its core, right? It's just someone that's really good at engaging people, someone that you fall in love with the person, not the story or the what's behind that story. And that's where we fall short as investors, right? We fell in love with someone who was just really, really compelling, had a great ability to connect with you and sell you, and then at the end of the day you realize, man, this isn't everything that I thought it would be. And that's where we as investors kind of have to create that ability or work or develop that ability to be able to be careful enough to not always believe everything that everyone tells you, right? Ask the right questions, do the right diligence. So I think it's 100, not 100%, but it's definitely a lot, the person that can tell the story, that can convey it, that can connect, and that can go a long way. But then you also need a great actual story and an actual sort of business behind this, right? And it's not like I see a lot of people trying to just solve for money or trying to go solve a problem because they want to be entrepreneurs, because it's now sexy to be an entrepreneur and there's money in it now. And I think those types of stories, yes, there's success cases, but I think it's hard to replicate those. And it's hard as an investor to point your finger at and bet on one of those stories. So you need someone who has a story that, there's definitely an issue that's close to home. Number one, they felt the issue, they stumbled upon the issue, and they know what they're solving for and why they're solving for it. I think that's key there. And then there's always, they need to have experience in that field. I'm not going to bet my capital as an investor or my investor's capital in someone who's trying to solve a problem and they have no experience. And so I think that's where team comes in, and it's the team's always that sort of the beams that support that great story. You need to be able to not only have a great story, tell it, but you need to talk your talk and walk your walk. Right? You need to be able to execute.
So if you have somebody that has what appears to be a good business model, we'll say that, and you and your team have the ability to look at something and decide what a good business model would look like, then you need to have someone that can tell a great story. So can you sometimes have someone that has a great model, you examine it, you look for the things that you look for in a company that has a higher probability of success? Can you get for them a talented storyteller who can tell the story and be believable? Can you help them with that?
I'm going to be blunt here. And I think we come across so many opportunities as investors, right? Everyone has an idea, everyone wants your money. And if it takes additional work on my end to get one of those key aspects, which is either storytelling, product, team, then it's probably not worth it, or there's a higher risk involved. And my job as an investor is to look for those opportunities where I can mitigate the risk pretty easily with my capital. And so if I have to invest extra capital, extra time, extra one of my resources that I have in getting you to be ready, I'm probably going to pass, because there's other plentiful opportunities that are there. And so this is a business where you have to choose, right? Strategy is choice, and choice means sacrificing one thing over the other. So I don't think that's the case. But I think you could potentially do it on your own, right? You need an investor to go out and I can tell you, hey, I think there's an opportunity there. You need to work on your storytelling. And I think you can go out and you can either build those skills or find a co-founder that can do it for you. It's just, I don't think it's realistic to expect an investor to invest or take that extra step.
You said something very powerful there. So if they, the entrepreneur that has a business that might be viable, but it's lacking components to move forward, get a co-founder. Get someone who
Absolutely.
has what you're lacking. Forget about thinking it's all my baby. And instead, I have this talk with people often. They bring me a deal. I look at it and I say, well, here's what's missing. Well, can you get that for me? No, just what you said, right? I'm not in the get that for you business. I recommend you find someone that has that skill in your space, or that they can transfer that skill to your space, and then you partner with them. You're now a team. You work out who's going to do what, and now together you have something that might get funded, that might be viable. But the way it is now, in my opinion, you're going the wrong direction. Is that what you're saying?
100%. I think you're lucky if you're in that situation where there's something you can fix, right? If I tell you, okay, I love this, but there's this component that's missing, go and get it. You're lucky, right? You can work towards that level where I feel very confident in betting my money on you. And I think one of the things that when people ask me, what's your number one advice in venture capital? It's learn how to take a no. And learning how to take a no means multiple things. One is knowing when to walk away when someone means no, and don't waste your time on an absolute no. But then it's also kind of building on top of those no's that give you a reason why you didn't get past the bar, right? And if someone gives you that little nugget, and if someone shares that, insight into why they didn't invest in your company and you can fix it, that is an amazing opportunity, right? And that's where you need to go out and gather those resources. And I think it's, we've always talked about, I think you and I talked about this last time, it's better to have a portion of something that's great than to be there by yourself when something's worth nothing. And so this, VC, the ecosystem, startups, it's all about collaboration. It's about building together. It's about, multiplying and one plus one being more than two.
And I like what you said. The presentations to the no is huge value if you learn from it, right? Why did they say no? Do they just not like me? Do I have a bad business? What's missing? If you can ask that question, okay, I see this is not a match for you. What's missing in me, my company, my offer, my request, that causes you to say that? And do you find that most investors, if you didn't waste a bunch of their time or make it cumbersome, would say, well, here's what I think. And then you walk away with that after that meeting, and now you've advanced your cause.
I don't think we do it naturally. And I think that's one of the things that we need to change as investors, where, for lack of a better word, I think we ourselves kind of waste people's times in that final sort of feedback, because we don't like to say no, right? No one likes to pass on opportunities. No one likes to be the guy that passed on the Facebooks of the world. And so we like to keep our sort of hands low and say, hey, okay, let's talk in a little bit, maybe come back to me. And that, I guess we're scared that if we tell you we tell you no, and this is why, you might get pissed at us, right? And great businesses, we're also competing to invest in your business. And so I think it's, I don't like it, but it's a strategy to kind of keep you engaged. And so I think you have to pull that out of us, right? That's something that you as a founder, as a person who's running a business, you need to be very, precise. And hey, I want your feedback. Can you please tell me? I get it. You don't want you're passing, but why is that? And kind of pull it out of us. We're not going to give that up to you pretty, it doesn't come naturally, because it means we're saying no and there's a reason. Right. But I think if you ask, we definitely know why we said no. And so it's just a matter of kind of pulling that out of the investors in that meeting where they say no.
How fast can you say no to someone to save your time and save their time?
And this is something I'm actually working on with a colleague of mine, is how do we automate a lot of these things, right? We have, as investors, we have many criteria that doesn't even require a conversation, right? We have a thesis, like I cannot invest in Asia. My fund doesn't invest in Africa. So all these things that I can pretty quickly automate and kind of filter through is going to make my things efficient, my process efficient, and it's going to give you a no. And it's a simple answer, right? I'm not investing because you're in Asia or you're in Africa or whatever that is, right? And so I think that's part of something that I'm working on, is how do you automate that? How do you use technology, and how do I get back a lot of time to really dig deep into these things that aren't as obvious? Did I like you as a founder? Did I like your storytelling skills? Do I feel like there's great chemistry between the founders? We see that quite a bit. It's, there's a great business. Founders on paper have all their required skills. There's no chemistry between them. They're not going to blend together. They're not going to stick through this. This is hard. creating a business takes a lot of work, takes a lot of sweat, a lot of tears, a lot of blood. And so if you're not in it with the person that it's even more important than a marriage, right? Most marriages last less than startups do, or successful businesses do. So all these intangible things takes me a while, right? It takes me a few conversations. I'm not going to say it should take months, probably, depending on the stage that you are, but I should be able to gain insight into and get to a point pretty quickly where I know in my heart, am I comfortable making this bet? Fortunately, or not fortunately, but the way the business model works is we are able to have a lot of misses. There's one or two investments that are really going to blow it out the water, return their fund, and give us our investors great returns. But I can take risks, and that's something that it's innate to our business, to our industry, and so I don't need to be 100% there. I just need you kind of get me 80% of the way there, tick the few boxes that I have, and then on the things that I'm not sure of, but that I know there's something that you can do and that I can kind of guide you through that, then I'm comfortable betting on you and seeing where that takes us.
Is there a period of time during which you have to put out a certain amount of capital in order to meet your requirements?
I'm fortunate enough that I work with a single LP, and our fund is an open-ended fund, so we don't have time constraints. But that's a great point that you're bringing up, and it's when you're going to knock on someone's door at fund as a startup founder, you need to know these things, right? You need to know whether they're where in their fund timeline they're at. Right? If they're early in the fund, they're probably going to take their time a little bit longer. They have that ability to wait a little bit more, right? They're not pressed to generate IRR. They're not pressed to return the fund. But if you're catching them at the end, that means maybe a couple of things, right? They don't have a lot of cash left, so they're going to be super picky, but they need to put that money to work. Otherwise, their sort of investment period runs out. And so, if you need to know how to play with those timings, and you need to be very smart about those strategies.
Are those questions that an entrepreneur could ask of the parties they're speaking to that will be readily answered, or might those be cards held close to the vest?
No, I think you should ask. You should always ask that. Number one, if I get asked those questions, it tells me you understand the game, and that differentiates you immediately, right? There's a lot of people who don't really know what they're getting into. If you know how VC works, then you're one step ahead. There's also resources that allow you to know this information beforehand, right? You can go into PitchBook and you can see like when was this fund raised, and there's certain there's average periods, right? If you have the average fund is 10 years and the investment period is so and so, and you can sort of back your way into these things. And next level sort of question would be, hey, I saw that you closed your fund, or you raised your fund, or your fund is at X vintage. Based on previous conversations that I have in my knowledge of the industry, you should be at this point in time in your fund. Is this right? Do I have the right sense? And then that also shows you're way above everyone else, right? In terms of your understanding of my business. Now I can relate to you, and you know what I need, and you know how to get it.
They're building credibility because they did the pre-work. So is
Right.
it common for entrepreneurs to kind of have the shotgun excitement approach? Maybe they're good storytellers. Let's imagine they have a decent business plan, and they just load up their shotgun and start blasting all over the universe, asking people for money. Is that something you see often?
It happens, right? And part of what I always recommend is you want to start going out before you're 100% ready. You want to start building that thick skin. You want to start getting feedback from investors, right? You don't want to go out immediately like shotgun blasting all over the place, because it's a waste of credibility. It's a waste of bullets that you have within your arsenal and people that you can reach out to. This is a closed environment, a closed community. We talk to each other, right? And so if you went out and you did something crazy, I'm probably going to hear about it by the time you get to talk to me. But we also know that this is an iterative process, right? And you have to build upon it. You have to improve it. And so that's another great point. You can go out before you're 100% ready. You can start testing the waters. Just make sure that you do it with people that you're okay with getting a no from, right? And that it's more valuable sort of understanding why they said no and what the feedback is than actually getting their money. And so I wouldn't go out immediately to my top choice of funds or investors.
And are you looking for someone that already has some of their own skin in the game? They've raised seed capital from friends and family, and now they're coming to you for the next round of possibility. Is that what you're looking for?
We do that, right? We want companies that are already generating revenue. They're post that seed. But I think there's investors in every single stage of the game, right? There's investors that are comfortable kind of being that first check and giving you that credibility and building it out. And obviously, you know, the earlier you are, the more sort of room you have to grow your investments and get a larger return. It's just a different sort of appetite for risk. So I wouldn't get discouraged if you're at that stage. It doesn't mean you're not going to get money. So you just have to find the right people, do your homework, and understand who is, you know, wanting to take on that risk to up their returns.
Is it more likely that the seed capitalist, because they're taking profound risk and have to spread that risk over multiple failures to get that one success, that they're going to want a bigger bite of your apple if they're willing to move forward with you?
In a way, yes. I think there's, so we always like to say, oh yeah, we did a lot of work valuing your startup and we feel like it's worth this much. But at the end of the day, this is more math and art than an actual science, right? We know eventually, you know, we know how much we get diluted each round. We know how much time at least it should take, you know, between rounds. And so we calculated how many rounds we could be in it with you. And we calculate the return that we need to give our investors. We back into your valuation. It's not the other way around. So we start off by knowing, hey, I promised my investors this return. And so for this investment to be successful, this is what I need to get out of at the end of the day. If you're asking for $1, let's say I need to get $4 out or $5 out at the end of the day. And so I sort of back into what the valuation should be in terms of the percentage that I have. But obviously, you know, the more rounds that are in between when I came in and when I can come out, the more dilution that happens there. And so that leads to wanting a larger piece of it, because ultimately I know that at the end of the day, I'm going to be diluted more. But I think it's, you know, it's not just that they want more because they're taking more risk. It should always kind of boil down to what is my expectation of return down the line.
So in what you're doing now, we know parts of the world that aren't going to work for you for whatever reason.
Mm-hmm.
Are there market segments that don't work for you for whatever reason?
Absolutely. And I think that's, you know, as an investor, you need to, and, you know, kind of the reason why we're here is the way you think, right? The structure that you have. The more you've narrowed down the space or the box that you play in, the less time you spend on things that aren't necessarily going to work for you. And so by making this very narrow and very defined and very specific, I remove the urge to look at things that aren't necessarily going to fit there, right? If I just say I'm going to invest in, I don't know, call it Latin America or the Americas, that's a huge, huge, huge margin of things that I can look at. And I'm probably going to waste a lot of, or not waste, but spend a lot of time and you know, a lot of hours refining that huge space into companies that I should be looking at, right? And spending the right time and making the most out of my time. If I immediately remove that from my head and that, you know, that temptation to look at everything, then I can easily say, oh, I'm sorry, it's not fintech, right? It's not health tech. It's if you're doing, I don't know, energy, I don't invest in energy, and I'm sorry, that's just not within my scope. And so these look for, and my advice would be look for investors that are very, very, that have a focus, or at least have partners that focus within specific industries. Go reach out to those, because it means that if they're spending time with you, you've already ticked the boxes, right? And you're already a little bit further ahead in the conversation, and they can spend that time in the things that matter, not just kind of looking at everything because it was interesting and it's a startup.
They will understand your space. So if they say no, you're likely to get some very great insights that in a general you couldn't get.
Well said. Yeah, absolutely.
So how would they find, I guess, would they look in PitchBook, for example, and say, this group likes fintech, this group likes manufacturing, this group likes software, whatever it is. So you have a greater probability they're going to like your deal, but more importantly, they're going to educate you at the very least. Yeah,
and I think we as investors need to be smart about communicating these things. And so our website should very clearly state what our thesis is. You know, if you look at our past investments, they should follow some sort of trend, or you know, they should sort of let you know what we like and what we're experts in. And it's
pick what you liked because someone in your group already had expertise there. Therefore, you develop the skill to underwrite it properly. Because if you think, there's a firm that a friend of mine told me about, they look at 20,000 deals a year to invest in between zero out of
Yep.
20,000, or maybe up to 5. So they obviously have a machinery in place to look at
Right.
that worth of deals, and they've got a magnet to bring in enough to look at, and they've got their multiple siftings down to what they're going to spend time on. But if you think about that, to look at 20,000 probabilities or possibilities to get one or none, I mean, holy
Yep.
smoke. You and I together couldn't look at 20,000 deals this year if we decided to, regardless.
Exactly.
Not possible.
Which is a great point. And also, like, when you're starting out, kind of sending those cold emails might not necessarily be the best strategy, right? As you said, if I get 20,000 that I look at, imagine how many emails I'm getting and how many of those I'm not really even looking at. And so I think that's another key crucial part of this is, take advantage of how close-knit this sort of ecosystem is, and everyone, pay it forward strategy to your advantage. Everyone has had someone do a favor for them in this industry, and we like to pay that back. And if someone opened up a door for me and I, someone asked me to do a similar favor, then I'm absolutely thrilled to do it because I know how much that meant to me. And so go out, network, meet your fellow entrepreneurs, people that are in your space, and they're probably the best introductions or the best way to understand, who invests where, but also get a foot in. And I'm not saying they're going to do it just because. You obviously need to impress them. It's their reputation. They're not going to go out to their investors and say, hey, meet this person who I need to believe in your business. I need to believe you're worth investing. But it's one of the things that I love about this sort of ecosystem. It's that everyone's willing to help, and everyone's, goes above and beyond. Even, if I don't necessarily know you haven't done anything for me, I'm going to do it because I know someone before you changed my life. So I'm willing to take a risk and change yours.
So you look at character that you can feel. At the beginning, you can't know someone's character, you just kind of feel it. The storytelling part, powerful, and it's going to bring someone down a path where they can learn from others. If you're a good storyteller, generally people will like you. Some large segment. The reason certain actors and actresses get famous is that they're good at telling stories, and people
charismatic.
There's people that, if they're Tom Cruise, for example, whether you like his acting or not, I enjoy him. I don't care about his personal life, or whatever's right or wrong there doesn't matter to me. But I know if he's in something, even with bad reviews, I'm going to go see it because I want to see how Tom does, right?
Right.
So if you have that reputation and then couple it with, if a lot of people have heard you tell stories and they've looked at your deals, and then they found out not only do you tell good stories, but you have discernment. You bring good deals worth looking. Now, you might not do them all, but when McElroy brings me a deal, I know he's done his diligence. It's worth having a conversation because if I tell him I don't like something and why, he doesn't bring me back another one that looks like that. He learned. I taught him, right? So eventually, whatever the number is that I would bring to you, you'd say, yeah, let me take Dave's call. I've had good success with working through with him. He doesn't waste my time. I enjoy my time with him. We would have a greater probability of being successful in a deal because we've built credibility with one another.
Yep. And I love what you just said. And I think, before we're talking about what are those resources, I think I would add one to what we talked before, which is social capital. And you said it so well, and you need to be very smart about building it, maintaining it, and using it eventually. And so, that's another great resource that you need to always be thinking about.
Yeah, in fact, there's people that I enjoy, but I look at their deal and I think I would never show this to anyone. It would damage my credibility that I would dare to bring it to them. So you need to have discernment, right? The investor have discernment. So how can we refine our skills in discerning what we should spend our time on? No matter how much we want to spend more than 24 hours in a day on doing stuff, it's not possible. And we could give up sleep for a while, we could give up eating for a while, but eventually that caves in on itself. So what can someone do to get clear about what they do well, so that when they move forward, they send clear signals out to others so that no one's confused about what they're wanting in a business relationship, so they refine their pipeline of possibilities down to something that's not exhausting?
As I think about this, I think one crucial aspect is that there's a lot of practice involved, right? There's repetition, there's getting out there, there's refining your process, there's iterating and building on top of, you know, what you've done before. And that's okay, right? I mean, I don't think this is something that people are born with. Obviously, some people have, you know, a greater tendency to be successful at this, but I think it's something you need to work at. I think, you know, if you're smart, you're gonna take not only your lessons learned and your experiences, but you're going to take someone else's, right? If you're listening to these podcasts, you're sort of understanding how people think and you're incorporating that. And so I think being smart about your own experiences, but also adding and learning from others' experiences, as corny as that may sound, and as logical as that may sound, a lot of people don't take that in, right? And they'll just kind of hit all the walls that they need to hit, but they're not learning from everyone else. And so I think if you're able to do that, you're definitely a step ahead. And the other thing that's helped me, at least, and I'm very analytical. I'm an engineer by training, and I always like to kind of have processes that are, you know, I can work through. But it's you always hear about, you know, setting attainable goals, right? Small, like the low hanging fruit, and things that will get you excited, and things that will kind of get that momentum going. I think it's more than having attainable goals, is having the ability to track and measure those goals, right? If you're doing something and you're sort of conscious and you're truthful with yourself about why you're doing something, it's so much easier to look back on that and learn from that, right? Because you said, okay, this was my hypothesis, this is what developed, this is what happened, and this is how they differed, and I can learn from that, right? Even if I was successful, I can understand where I was wrong in my original hypotheses, and what ultimately took me to either fail or be successful. If I'm not conscious, if I'm not tracking, if I'm not measuring, I just know if I was successful or not, and that's all the information that I have. And so it's very hard to build on top of that and learn from it. If you're not conscious, and if you're not, very active in terms of in measuring and having that information and that feedback loop with all your actions.
When you find that, when you get surprised, you're going down a path with somebody, now you're surprised. Have you found it useful to go back and look at your process and say, I was missing a piece in my process that allowed this to occur. I'm going to add this. Now, you never want a process to become so cumbersome that you can hardly.
100%.
Right? It's too front end loaded with obstacles, and you can't hardly, and nobody can get through it. But you want to add certain things to your process when you notice you got bushwhacked by something that you should have noticed sooner. Now, along with that, have you noticed this? You get early signs when you're talking with someone, looking at a deal, and a funny feeling comes to you, but there's enough good there, so you just say, oh, well, kind of put it back out of your head. And then later on in the process, the oh, well comes popping back out again. You thought, oh my gosh, it was right there, and I just ignored it. That happens to everyone. What have you found can help you not have that happen?
You know, hindsight 2020, right? When you look back, a lot of things make sense. A lot of this, especially in early stages, is intuition, right? And if you get to a point where you've done this so many times, you can start picking up those signals. And you need to be very honest and truthful with yourself. And if there's something that's not there, I need to stay away from that temptation to continue moving forward, because there's a lot that's good. But if something's not there, there's so many other opportunities. It's okay to say no.
You're getting a signal you can't define. We'll call it a gut instinct or something. It's not gut. It's just that it's so subtle inside of you. You haven't put the pieces together of what's wrong. You just know something's wrong.
Right. And that's, it's hard, because there's a lot of signals that are evident that you can measure that are there. You say, like, I love these things, but if there's something that's wrong, there's probably a reason, right? And this is where looping everything back or circling back, it's, if you have that ability or that discipline to trace back your steps and understand once it's happened, hindsight 2020, then you can say, oh, this was my feeling, this is what was going wrong, now I can put a name to it, and it's no longer a gut feeling or a hint or a hunch, it's something I have defined. But it's so hard, and it's so tempting to go with what you already have and what you can put a name to, and kind of go, oh, this is telling me, yes, I'm going to go with that because it's so much easier to define than kind of having that, listening to your gut. And I think it's very, I've not mastered that at all. I would, be very skeptical of someone that tells you, oh, I know exactly when you listen to my gut. But if it's there, listen to it, kind of write it down somewhere, jot it down and say, look, I had this thing come, this little signal or this little light bulb pop up. and then eventually try to figure out what it was and put a name to it and define it.
Can you do this within your firm? So you like a lot about it, and a lot of the pieces are there, but you got that funny feeling like something's not right. Can you contact someone within your sphere or your firm, but within your sphere even, and say, hey, David, I like this deal for all these reasons, but there's just something that doesn't feel right to me. Can you take a look at this? And if it warrants it, even talk with the people, but can you take a look at this and see, am I missing something? Is that helpful?
Yes, and that's one of the things I love about this business, right? We're taking so much risk that wherever we can spread the risk, it's great, right? If I can call you in and say, hey, David, I have this great deal, there's something missing. Why don't you take a look at it? And if you like it, why don't we both go in it, right? Let's you're helping me make a decision, then I'm opening up this door for you. I've already done most of the diligence. If you like it, let's share the rewards. And that's an amazing feeling you have, where you're not sort of going in or going at it by yourself, and you're sort of spreading that risk. You're gaining insights and you're gaining experience from a lot of other people. And so we love doing co-investments. And then the other sort of great aspect, or the way this is structured, is we have an investment committee. It's not just me, and I don't think there's ever going to be a single person making a decision in these ecosystem. It's always consensus based, right? And if two people kind of have that same feeling, if two people are having trouble putting a name to whatever that little thing is wrong there, we're probably going to pass, right? And if I can't convince you that this is a great business, why am I going in, right? If I can convince someone that I know very well how they think, what they're looking for, then how is that founder going to go out and convince other investors? And how is that founder going to convince people, to work for him or be his clients? And so I think that part of the process is great in this industry.
And the learning that you've had, if you would compare your early days in the business to now, what would be the most profound learning that you can bring to the audience that you've picked up over that period?
So my earlier investments were great examples of what not to do, right? I lost not a lot of money, but I lost the money that I invested. And I take that as a I paid to gain knowledge and gain access and get my foot in the door. And I think what I learned the most was that, I've been saying this a lot, but there's great temptation in doing something because everyone else, there's FOMO there, right? This person is in there, why I should probably go in there. And this person told a great story, and he put in numbers in front of me that told me I was going to make 10x my money in 5 years. And you need to be, sometimes you need to be skeptical, right? You need to be a dreamer to be here. You need to be excited about the future. You need to be excited about the unknown, but you need to be very realistic sometimes in asking the right questions. And what I mean here is, you don't need answers specifically, right? I don't need you to have all the answers, but I need you at least that when I ask a question, I need to know that you've already thought about that question, that that question is a burning question, and that you have a plan to answer that question. A lot of the times I thought, this is early stage. It's obvious that they don't know this, or it's obvious that they hadn't thought about this. That's no excuse, right? Even if it's early stage, even if it's not defined yet, you need to have thought about that. I need to know that you are looking at all the risks that are out there, and you have a plan to mitigate them. This, venture capital is all about buying risk down, investing money to get the risks from here all the way to here, and sort of have a great business. And that only happens if you understand the game, and if you're asking yourself these questions and you have a plan on how to answer these questions. I don't expect you to have answers, but I expect you to have a plan on how to answer the burning questions.
You've got a unusual mix. I know people that are engineers, brilliant engineers, but they have very poor personal skills. They have a hard time communicating with other people, other than maybe a real cold engineer. They can talk stat to stat, right? Mm-hmm. And you got a very charismatic personality. How did you end up with the combination of engineer, analytical, and charismatic personality? How did that happen?
Now, I appreciate you saying that, because it's, I am very much an engineer at heart. I'm very squared. I think in algorithms. I'm very much that personality. But little by little, I started sort of discovering this world where I could kind of have interaction with people, not only numbers and Excel sheets. And it was interesting to me. But it's still, it's not something that comes naturally 100% yet. It's still kind of, having these social interactions drains me more than it would drain a normal person who, is an extrovert. And it's a matter of having put myself out there, kind of suffering through it a little bit at the beginning and saying, hey, this is something it's a skill I need to build. Right. And I was very aware that I had that engineering mindset and personality, and I knew I needed to complement that. And so little by little, I worked at developing that other side of me. I think, I'm not going to give myself praises and say, hey, I developed this on my own. I think it's a combination of getting to know people who were kind to me and who kind of guided me and gave me their hand and showed me how to build these things and how you could interact with people who were, people who I could trust from the beginning. As an engineer, you only trust numbers. These is a game where this, VC is a game of you're 70, 80% of the way there, and then, you're taking gambles. And so having that, the fortune of having people who kind of guided you through that and said, hey, it's okay, you're taking risks, as long, and then building that into my own analytical and engineering mindset where, I'm quantifying those risks. I'm putting a process behind those risks. I'm, jotting things down and then coming back and reviewing that. And it sometimes gets hard, right? It sometimes gets, confusing, and you go all the way to your extroverted personality or charismatic, and then you forget all your processes, or you can get stuck in your processes, and then you lose out on a lot of relationships and things that could have been great if you hadn't been that stubborn. It's back and forth, but I think I don't know. Long story short, it was just putting myself out there and building that skill and kind of getting a little bit of thicker skin with those social interactions, and that would, burn me out initially.
So what you're saying is that you have found personally that you can take something that you realize you need to be better at in order to accomplish what you want in life, that when you start practicing that, it feels terrible. You're awkward, doesn't feel good. And even though you refine your ability to do that because it didn't come to you naturally, the energy you put into that side of your personality takes more out of you than the analytical side. You could analyze, if we're going to measure it in minutes, you could analyze a lot more minutes before exhaustion than you could be charismatic, which would take more out of you, but it can still be done.
Yeah, 100%. I'm an example of it. It's not easy. It's a choice that you have to make. You can be very comfortable and be very good at something and kind of stay there. I want something else, right? I like this world. I started liking that interaction. I started liking the way that you could sort of work together and co-invest, be teams, work with several different founders. That was attractive to me. And so I knew in order to get there, I needed to do this thing that was very uncomfortable. But again, it was a choice. I could have stayed in my engineering mindset, kind of doing that and having no interaction. I would have had no discomfort, but I chose a little bit of discomfort to at least try to get to what I thought would have been or made me, enjoy things a little bit better. Fortunately, I do enjoy this quite a bit. And so there's a reward at the end of all that, uncomfortable phases that you have to go through. But I could have worked the other way around. I could have said, hey, I hate this. Why did I put myself through this? It's another risk that you have to take, right? And it's kind of measuring that risk reward, like we've been talking about.
So with what you see in the world today, what are you excited about in terms of business, in terms of life? Where do you want to put your energy? If you could attract more of some particular type of opportunity your way, what would that be? What excites you?
I think we touched upon this last time, but I'm starting to see that there's a space for, venture capital used to be about doing those things that didn't seem practical at all, right? So like putting, SpaceX, right? Being able to go in a rocket if you're wealthy enough, or these types of things that seem very far-fetched. No one's gonna, put a lot of money into it because it's very risky. We don't know if it's a business yet. And that used to be venture capital. You're venturing out into the unknown. So I think the earliest example is Christopher Columbus coming to the Americas. And that was, the first example of someone backing someone into venturing into the unknown. That it wasn't necessary. It was like, we know the world. Why do we need to see if there's anything out there? They did it. I'm seeing that there's a shift towards solving the problems for 90% of the population as opposed to solving the problems for 10% of the population. And when you look at that, it might not be, your highest margin businesses. It's not, you're not paying hundreds of thousands of dollars to go to the moon, right? You might be paying, like a small sort of fee for having better access to the banking system or these types of things. And I think we've been, so countries that have these massive problems that aren't up to, aren't developed, or, first world countries, or whatever you want to call it, have been isolated in a way where they felt their problems were their own and they were just kind of lacking in their own areas. But once we get those, when you get to compare, I was in Egypt not too long ago, and I was comparing, what's going on in Egypt and the opportunities that are there with what's going on in LATAM, they're very similar. And so I'm excited about the ability or the opportunity that there is now to sort of translate or understand the similarities between countries or regions that seemed very far apart, very unlikely to have anything in common, and being able to bridge those differences. Obviously, you need to, and what's hard here and what's challenging is being able to adapt those things and kind of tweak the little things that need to happen in each of those regions. But there's a lot more in common that there is that there's difference. And so I'm very excited about that. Being able to look at the broader problems in a sense where, and these economies are regions that have been isolated in a way, and then tweaking them so that you're solving problems, large problems, not only profitable, crazy problems like we used to only do in tech and VC.
So are you imagining, as you go forward in your life, becoming a more active participant in some of the companies that you're looking at, or you end up being part of those companies, not within conflict of what would go on with your firm? Is that something you see in your future that would be interesting and enjoyable to you?
For sure. And if you'd asked me this question, 8 years ago, 10 years ago, when I was starting my career, I would have said absolutely not. I want to be involved with many different projects. I want to have visibility into many different industries. I would never get tied down to a single company. But as you kind of have that, and you had that experience, you start realizing there's companies that are starting to pull you their way, right? And you're like, oh, this is so exciting. I love what the team is doing. This business is great. I would love to be there, and I would love to be doing this 100% of my time. And so I think there's going to be a point where I find that opportunity. I don't know if I'm going to spend the rest of my life at a single company. I can't say that, but I'm definitely a lot more open to spending a lot of time focusing on a single thing. And, that is a reflection of what I've been doing lately as well. I'm a co-founder at one company. I'm not 100% involved yet, but, there's the opportunity there. I've gotten this side, consulting business where there's companies that I'm much more involved in than others. And, there's an opportunity to kind of stay there eventually if it works out for both parties. And so I'm open now to these, exactly what you're saying, kind of walking away from the broad spectrum and focusing a little bit. But we'll see what happens. I don't have a precise answer on that yet.
So it sounds to me like over time you've developed discerning skills. So you can look at, with all the things you've looked at, you're narrowing down what interests you. So we go beyond the point of, will this investment be successful? Can I make money? Is it all right to be around these people? Now to something that's next level, which is, yeah, I can make money. Yeah, I can pick deals. But there's something about specific deals that seem more meaningful to me. And I would like to spend more of my time, I'm speaking for you, around things that are more meaningful, where the association with the people, the team on that project brings energy to me, charges me up, maybe even makes my personality more charismatic so that it's not so exhausting. Maybe I got other charismas pulling me up, right? And that you can find your way, what's right for you by the experiences that you're having. So you're in a space where you've had an incredible opportunity to learn. And as you've learned, you've also refined yourself as a human being. And I think it sounds to me like you're getting closer to deciding for you what's the meaning of life. And as you pursue what is meaningful, that's what makes life worth living, regardless of the amount of capital or financial success you'll have. Rather than me making a judgment about how much or how little is right or wrong, we'll set that aside. What's really important, assuming you can eat and have a safe place to live and things that many of us take for granted, is what can you do where you feel that you are part of something that's more than just you? How can you give to others, not sacrificing yourself, I'm not
Mhm.
suggesting that, but give to others, and it becomes something that's, you become exponentially more than you would be individually, as does the group,
Right.
that association, like a magnificent team that's better together than they are
Then
separately.
yeah.
So if you were to tell our audience something that they could do today that would be easy not to do, but because they start doing it today, it will have a profound impact on their life long term. What would that be for you?
I think, thinking back on our conversation, and I gave this a little bit of thought before we jumped on this call. For me, what's made an impact, and what's taking me from kind of just going with the flow and doing what I thought was right and what I thought I had to do, versus starting being able to take those chances, to take risks, to evolve, to explore different things, and to ultimately come to a place like you just said, where I find meaning, right? And it's not easy. I don't want to say I found the exact meaning of my life, but I'm closer to it than I was a few years back. Even though a few years back I thought I was exactly where I needed to be. I was, in finance and private equity, making great money, but ultimately I wasn't at the right place, right? And I've kind of given myself the liberty to explore these things. Sometimes by choice, not really. I stumbled into these opportunities. I, hit some walls that kind of bumped me into a different direction. And fortunately, I've kind of, found the right path. But what I've done that I think people can do, and that's kind of made this more, a decision than luck and stumbling into things. As I refine that process is, what I talked about a little bit earlier, kind of having that discipline to measure and track things. If you're constantly measuring and tracking things and understanding, or at least kind of, jotting down somewhere, it might be just memory or whatever, but hey, I made this decision because I thought this was going to be the outcome. And this was my information going in, this was my hypothesis. And then having the discipline to look back, not only when you make mistakes, I think that's easier. It's like human nature to kind of try to understand what went wrong, but also when you're doing things that worked out, that's when it's harder, right? There's a lot of ego there that you can say, oh, I was absolutely right, nailed this one. And it might not have been the case, right? It might have been that, other things kind of convoluted and happened and made things work out at the end. But, if you ask me, coming from a very engineering mindset, kind of having that ability to measure things, to track it, there's a saying there that anything you don't measure doesn't really exist. And so if you're able to measure things, to track, you're building this arsenal of information that you can ultimately reflect upon and take better informed decisions and not just guesses. And that would be my advice, right? Make sure you put yourself in a position where you have information to make decisions and you can build upon all those.
So if we were going to make it simple for someone to
Right, please.
pick one thing that you would like to have in your life, or that you already do have, we could do it the reverse of that,
Yeah.
right? And then go back and look at, how did that happen? So it could be something that turned out the way you didn't want it to be. People notice, they don't generally spend time as saying, I am so happy, let me figure out how this happened. But I'm very unhappy. There's introspective need to figure out, how did this happen, right? So if you can go backwards from either of those cases, we're going to imagine most people are going to recognize something that's made them unhappy and say, that's interesting. I don't like this feeling. Where did this come from? Was it someone else's fault? Well, if it is, you're a victim. So let's set the someone else's fault aside, and let's assume that if you feel like blaming somebody, well, what was my part in picking them, putting them in a role, and depending on them for what I did? And what do I now notice were the signs that was not a good choice? That's kind of the engineering process that I heard you
Yeah. Yeah, exactly. I think it's a process, right? And you can build, you can tweak it, you can customize it. But if you start building that process, I would eventually then challenge you, once you get comfortable in understanding, those things that are making you unhappy, also do it for things that are making you happy, because at least then you know why you are happy and how to chase that happiness and how to chase that meaning, right? If you don't know what's making you happy, then how are you getting closer to that ultimate, like, long lasting term happiness. And so, get comfortable with your process, do the ones that are easier, which is, I'm unhappy, or this went wrong, or this, something that's easier to sort of put that process to work and refine it. But challenge yourself to look at those opportunities, or look at those things that are making you happy, and defining why that is. And then you can ultimately chase that and incorporate more of that into your life.
I like that process. So that's how an engineer could become charismatic. You just described you had your own formula. You didn't even know it. You engineered your way to charismaticism.
Thank you so much for helping me phrase that and making it clear. Now I know.
Hey, let me ask you this. If you would like someone in our audience to be able to reach out to you by email, maybe, to ask you for direction or insight or something, how would they get a hold of you?
Yeah, I love doing this. This is part of what I love doing, is this mentoring. I do a lot more business mentoring, but I would love to, if there's someone that wants more personal mentoring or something, picking my brain, I'm happy to do it. I think, LinkedIn is a great way to find me. We could probably post that with whenever you post a show. My contact info, my email is also kind of open if you want to reach out. It's Juan, as in my name, at elevantecapital.com. We can post that as well, but, please do reach out. I think, like I said, part of what I enjoy most about this ecosystem is being able to pay it forward. And, a lot of people did this for me, and I'm happy to at least help out, if I can in any way, to someone else and change their life like someone did for me.
Yeah, you've got great energy. And the point of this show is to share what you just described today with the audience, so that those people that are willing can say, that's interesting. I hadn't thought of it that way. Let me apply that starting now. Not think about it, not analyze it, not intellectualize it, but how can I take what was said here, pick one thing, what's a feeling I have now that I like or don't like, and where did that come from? What were those steps? And how can I cause more or less of that to happen in the future? So I would like to thank you so much for taking the time to be on the show. You've been a delightful guest. Audience, please give us a thumbs up. Please subscribe. Please tell us if there's somebody you'd like us to interview. Please give us a comment. Reach out to either one of us. It's been a great pleasure spending time.
Pleasure's mine.
Yeah, I appreciate it so very much. So look forward to working with you, getting to know you even better in the future. And
For sure.
I certainly appreciate you for your time.
Thanks, Dave. Appreciate it.